In this video, I'll be doing a full analysis of Nano Dimensions ticker symbol NNDM and DRAFTKINGS ticker symbol DKNG. And at the end of the video, I'll give you my final thoughts on which stock I think will give you a higher return and would be a better investment. So first, NNDM. Nano Dimensions Ltd is a 3D printing company. The company focuses on the research and development of 3D printed electronics that includes a printer for multi-layer printed circuit boards and the development of nanotechnology-based inks. Nano Dimension also supplies its nano inks to other fields in the electronics market. In about 1 year in 2020, the stock returned around 2,300% at its peak. However, year to date, the stock is down 17%, which is probably a correction to the stock's price. The current share price of NNDM is $7.08. The 52-week range is 0.65 cents to $17.89. It has a market cap of $1.762 billion and an earnings per share of negative 1.13. From 2016, its revenue has experienced tremendous growth, from 45,740,000 in 2016 to 7.09 million by 2019. However, the business ain't recession-proof. In 2020, their revenue dropped by around 50% to 3.42 million. As for SG&A expense, has been slowly creeping up from 8.72 million in 2016 to 15.09 million in 2019. In 2020, the expense increased by more than 100% to 35.14 million. The latest news on NNDM is an article by investorpalace called Can Nano Dimensions Learn How to Print Money? The article mentions that NNDM is sitting on a pile of cash, but NNDM is still not a buy. The author's largest arguments are that the company will have a difficulty adopting a business model that relies less on hardware sales and more on its ink, cartridges, and software sales that will provide recurring revenue. Another big argument is that the author doesn't see any evidence that will generate enough cash to support its operations. Now let's have a look at DraftKings. DraftKings Inc. is a digital sports entertainment and gaming company. The company business-to-consumer segment provides daily fantasy sports betting, and online casino products. DraftKings business-to-business segment engages in the design, development, and licensing of sports betting and casino gaming software. DraftKings serves customers worldwide. In a 5-year time span, DraftKings has returned 486.53%, and year-to-date the stock has returned 28.13%. The current share of DraftKings is $57.48. It has a market cap of $22.86 billion. DraftKings revenue has increased from $0.226 billion in 2018 to $0.323 billion. In 2020, their revenue increased by around 90% to $0.651 billion. The latest news is an article by Markets.co. The article titles, Oppenheimer assigns a buy rating on DraftKings. Oppenheimer analyst Jed Kelly assigned a buy rating to DraftKings yesterday and set a price target of $80. According to tipranks.com, Kelly is a 4-star analyst with an average return of 12% and a 49.2% success rate. As of February 16, 100% of analysts recommend to buy DraftKings. Here are my final thoughts. Let's try to analyze the information and pick the best stock out of these two. Nano Dimensions is not a recession-proof business. A pandemic will actually hurt demand for its products, as shown in its 50% drop in revenue. Nevertheless, Nano Dimensions has proven itself that it can really thrive in a booming market, as its sales grew by more than 100% before the pandemic, by more than 100% per year. Therefore, I think investors would have to deal with a declining or sideways share price movement until the pandemic subsides. The current drop in share price is an opportunity for investors to buy into the dip before their earnings and share price start to rise rapidly again. It may take 2 years until the pandemic subsides and demand returns though, so investors might have to keep dollar cost averaging and hold on to dear life during the meantime. As for DraftKings, they are a recession-proof business, and the pandemic actually brings a boost to their business since they provide online services such as fantasy sports betting, and casino software. These consumer products can actually have a greater demand since people are stuck at home. The 5-year return as mentioned previously is great, and so is the year-to-date return. And by the way, Cathie Wood also buys and is a shareholder of DraftKings. So now that I've analyzed these two stocks, I think you all know which one I prefer. I love stocks with a good track record of excellent share performance and revenue performance. I also love stocks that monopolizes their market. DraftKing is predicted to own 49% of their market. Therefore, my pick would be DraftKing, as Nano Dimensions do not meet my first two criteria due to its shortfall from the pandemic. Nano Dimension is a great stock. However, investors will have to face a lot more volatility in the short term until the pandemic subsides. DraftKing, on the other hand, will give investors an ease of mind, as their business can scale even faster during the pandemic, allow their share price to continue their outstanding performance, which beats the market's performance many times over. So my answer is DraftKing. Thanks for watching the video. If you want more stock market analysis and want to learn how to make money in the stock market, click subscribe. It's free and you can unsubscribe anytime. Also, if you want me to analyze any stock, just comment down below.